Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. Thanks for tuning in today. It is Rapid Fire Friday here at Financial Issues. And if you're watching live, which happens at 8 a.m. Central Time, our phone lines are open. You'll be the first caller in the queue if you call us now at 610-363-1110. So on today's program, we're going to get you caught up. We're going to get you in the know about the latest market and economic news. We're also going to, of course, get encouragement from the scriptures. We'll be in Genesis 1:27 today as we recall what God says about life, and we begin our May campaign for preborn ministries as we push forward and encourage you to fund the light, to be a joyful, generous, and obedient giver. 610-363-1110 is the phone number if you want to be the first person in the call queue today. So, at Financial Issues, we help you to stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets and help you understand how that impacts your own personal financial issues. Got quite a few takeaways from this week that is ending May the 2nd, 2025. We'll start with the markets. It was another volatile week on Wall Street. The markets rallied early this week only to fizzle midweek before regaining ground ahead of the Fed's interest rate decision, and that's coming next week and will likely continue its upward momentum as China indicates that they are ready to talk tariffs with the U.S. Since the start of this week, the Dow is cumulatively up about 1.1% going into the last trading day of the week. The S&P is up about 1.3%, with the S&P sitting at a crucial level. S&P closing at roughly 56.90 yesterday. 56.71 was the read on the S&P 500 on April 2nd at the 4 p.m. close, minutes before the 10% blanket tariffs were announced, along with the unveiling of the reciprocal calculations for tariffs and the ensuing escalation of tariff rates with China. The NASDAQ for the week up 2.2% going into this last trading day, and the pre-markets are looking very good this morning after a better than expected non-farm payroll report out just a few minutes ago, and China finally admitting to coming to the trade talk table. Speaking of that, China's Ministry of Commerce indicated on May 1st that it is evaluating U.S. overtures for tariff talks, signaling a potential openness but emphasizing that the U.S. must show sincerity by rescinding unilateral tariffs. Such tough talk. The statement said, if the U.S. wants to talk, it should show its sincerity and be prepared to correct its wrong practices and cancel the unilateral tariffs. I wonder if that means that they're considering correcting some of their wrong practices. But it's a game of he said, she said. There's a discrepancy between what he, speaking of Trump, has said about the trade talks and what Xi Jinping has said, she said, about the negotiations.
That's copyright for FISM. That's awesome.
This follows reports of U.S. officials quietly reaching out through multiple channels to initiate those discussions. But Trump has repeatedly claimed since mid-April that talks with China are underway. He stated in interviews and to reporters that he's spoken with Xi numerous times and that his team is actively negotiating. That's what he said. These assertions have been contradicted by Chinese officials who called claims purely misleading and baseless. However, China has consistently denied negotiations, but China has been quietly exempting some of their tariffs on U.S. goods. You hadn't seen that much in the news. But on the labor front, let's shift gears a little bit so we can get everything in here. Weekly initial jobless claims increased to 241,000, up from 223 the previous week, notably above expectations of 223,000. Now, there is potentially this could be a one-off, as claims were high in New York, which also corresponds with their spring break week. And in New York, bus drivers and certain employees like that can file for temporary unemployment during the week of spring break. So we'll keep an eye on this. This is a weekly number that gets reported. Now, the 4-week moving average also went up to 226,000 from 221,000. Notably, continuing claims surged to 1.916 million. It had been staying at that 1.8 million level for a while. So it's an 83,000 increase from the prior week and 50,000 higher than what was forecasted, making it the highest level since November of 2021. Additionally, private payroll data that came out midweek from ADP showed that the market labor indeed may be starting to cool, with just 192,000 jobs added in April, slightly above expectations, but down from what they reported in March at 208,000. ADP also noted a slowdown in pay growth, suggesting easing wage pressures. And the Challenger report for employment revealed that U.S. employers are announcing almost 65,000 job cuts in April. That's a sharp increase from March and the highest total since January. The bulk of these layoffs were in technology and retail, pointing to continued restructuring and cost cutting in key industries. The report that we've been waiting for all week, non-farm payrolls, out just this morning. It said that the U.S. economy added 177,000 jobs in April, well above what was expected at 130. But there was a slowdown from the downwardly revised gain of 185,000 in March. The unemployment rate did hold steady, though, at 4.2%. Labor participation, which measures the ratio of how many able-bodied Americans there are in the workforce versus how many of them are actually seeking work, the ratio is 62.6%, up just a tick from 62.5%. That is a good thing. More people coming into the labor force. We're hearing of layoffs, but the unemployment rate still didn't go up. So that indicates a little bit of good news. And the employment to population ratio moved up to 60% from 59.9, indicating work ethic may be on the rise in our country. That's a good thing. I hope that continues as people rely on their God-given talents and abilities to provide for their families rather than looking for the government to send them a paycheck and the government to play the role of God in their lives. On the inflation front, PCE came out on Wednesday, 0% month-over-month increases. Let me get to, I'm running out of time here. Growth in the economy. The economy is slowing. So last week's GDP report showed that the economy contracted by 0.3% in the first quarter of the year. This is largely due, though, to a surge in imports as businesses rush to get ahead of the impending tariffs. So this marks the first GDP decline since 2022. Does this mean that we're going into a recession? Maybe, maybe not. It does take at least 2 consecutive quarters of negative GDP growth to get the economist in the mood to actually call recession. But inflation, back to inflation. Inflation is proving stubborn. Both core and headline PCE for March didn't budge, came in month-over-month increase at 0%. The core PCE, which is the Fed's preferred gauge of inflation, had an annualized rate of 2.6% year over year in March, down from 3.0% in February, and headline inflation was increasing at 2.3% year over year, so indicating some easing in price pressures. Some major grocers are already pushing back. Some companies like Albertsons reportedly told suppliers that it won't accept tariff-related price increases, while Walmart is still exploring whether to observe the cost of increased tariffs or pass them along to shoppers. In response, both companies have raised prices, with some increasing 40 to 100%. Temu and Shein, Chinese importers, are not skirting the rules anymore. So the de minimis exemption has been revoked, and Temu and Shein have indicated huge price hikes on their sites. Amazon chimed in this week, suggesting that they may start to list the cost of Trump tariffs on theirs, but backed off after some pushback from the White House. Got a little bit more information to share with you, but I hear the music. We've got a hard break. We'll take a break, and then we'll come back with the rest of the In the Know section to get you caught up with what's happening. Stay tuned.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common: the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
May is a time to honor mothers, their strength, sacrifice, and unconditional love. But for many women, motherhood feels uncertain and overwhelming. Fear and doubt leave them considering abortion. You can give hope. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. Go to preborn.com/FISM to give today.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only, and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it, and consult any financial professional you work with to make sure it's applicable to your financial plan.
Welcome back to Financial Issues. Our phone lines are open. It is Rapid Fire Friday. We're ready for your call. 610-363-1110 is the phone number if you want to get into the call queue. You will be in first place. So, if you like to be first, 610-363-1110. We've also got lots of questions that we'll be getting to as well. But first, let me finish up my thoughts on recapping the week that we are ending today, which is May the 2nd. So I was talking about Amazon before the break, and Amazon chimed in that their Hall storefront that focused on ultra low-cost items was considering showing how much of a product's price was due to tariffs. Now, as of today, Amazon has confirmed that they will not display tariff-related costs alongside product prices on its website because it got a good bit of pushback from the White House. So Caroline Leavitt called it a hostile and political act that Amazon would, post this and kind of pin it on Trump. And so Amazon has clarified that the idea was just merely considered and never approved. Speaking of inflation, I talked about the report that we got out this week right before the break. And another site that I follow pretty closely is Trueflation. Now, Trueflation measures real-time inflation. They look at millions of data points and get an idea of how prices are moving. So it's a different calculation than the government numbers of PCE and CPI and PPI, but Trueflation shows inflation to be at 1.37% right now. That's down from 1.8% at the end of March, right before Liberation Day, and all of the trade tariff war started back up or started escalating. So for me, the takeaway from all of this is that if I'm going to pay more because of tariffs, I want that money going to an American company, not to the Chinese Communist Party or to foreign exploiters. And I don't believe that I'm alone. I think the shift in consumer behavior may just be beginning. It's going to take a while to pan out, but I think if all of the moving parts of what the Trump administration is trying to do come together beautifully, we're going to have one big, beautiful economy. Now, we'll have to suffer some pain to get there, but I think that we're on the right track. So inflation is on shaky ground. The labor market seems to be cooling, and growth may be notably stalling, but it will make for an interesting week ahead. So what is coming next week? Looking ahead to next week, the Fed meets May 7th and 8th. While the market expects rates to be held steady at this meeting, it will not include a dot plot or economic projections, but we will have the press conference. So we'll get the decision, which will likely be nothing, interest rates staying the same, and then we'll get that press conference, and then the Jay Powell's written statement and the press conference to follow. And the market, of course, will be hanging on every word. CPI inflation report comes out the following week, and that will be important as well. So on deck for next week, we have earnings reports from the major retailers, including Costco, Home Depot, and Disney, and this will give a deeper look into the consumer. So in times like this, when signals are mixed, and you know what? For as long as I've been doing this, they almost always are. There's always uncertainty on the horizon. And it's really easy to let fear or greed guide your decision. But we want you to be grounded in the Word. We want you to be stable in all of your ways. So we want you to be disciplined, thoughtful, and faithful in the approach that you take to investing. And that means, first and foremost, honoring God in our finances. We give you a very practical way to do that with biblically responsible investing. So we don't want you to chase the headlines, but stay focused on purpose, which is to honor God. Don't panic, don't speculate, just stay faithful. So now that you're in the know about the recent and upcoming financial issues, we hope that you'll learn more about how we can help you integrate that into your own stewardship. Check us out at financialissues.org. Well, let's shift gears. We're still waiting for calls for Rapid Fire Friday. 610-363-1110 is the phone number if you want to get in the call queue. Our stewardship verse today comes from Genesis 1:27. So God created man in his own image. In the image of God, he created him. Male and female, he created them. What do you think, Seth?
It's a good one, Shana. This is a verse that has come under fire from many on the left trying to conflate different gender ideologies and stuff. But God's pretty clear that it's male and female. But that's not really the point of why we're talking about this verse. The point is that every human life bears the image of God. So we must uphold the dignity of all human life and defend it no matter how small. I think it was Dr. Seuss who said a person's a person no matter how small. A lot of people in our country have ignored that, apparently. But yes, a person is a person, even when they're the size of a baby at 6 weeks, for example, as large as a pencil dot on a page. That is a person. That's a person with God-given rights, still the image of God. So we need to be good stewards of that life and protect it, Shana.
Amen.
Yep.
You know, God gives us the privilege to be imitators of him and to participate in the creation of a new life. It is God that gives life, but man, it is such a privilege to get to participate in that. And I've had that privilege twice. Once as an unwed mother in an unplanned pregnancy. My now husband and I were both believers who weren't really following God's instructions on how to have godly relationship. But abortion for us wasn't even an option. But the pregnancy certainly did bring us to a come back to Jesus moment. We got married and vowed to bring our son up in the fear and the admonition of the Lord. But that's not such an easy choice for many others who find themselves in this situation and don't have the foundation of Christ. So I remember my first ultrasound. It was an eye-opening and very joyful experience to actually see what was growing inside of me. And it helped me to foster the bond between me and my child. So when I contribute to preborn ministries every month, I get to help create that same experience for a mother who may not yet realize the amazing opportunity that they have to bring an image bearer into this world. So today is day 2 of our Preborn Mother's Day campaign. We hope that you will be motivated by what you're going to see and hear over the next month. We'll be raising money to help preborn ministries push back against the darkness of abortion. Speaking of the darkness of abortion, on April 24th, Colorado Governor Jared Polis, I guess I'm not sure if I'm pronouncing the name right, but anyway, he signed a controversial bill into law in Colorado, allocating $1.5 million of taxpayer funds each year to go towards abortion services. The legislation not only mandates that state employee health insurance cover abortion costs, but it also codifies the right to an abortion up till the moment of birth. The bill's backers argue that funding abortion is more cost-effective than covering the expenses of childbirth. However, the true cost of abortion goes far beyond dollars and cents. At Preborn Ministries, we come alongside Preborn because we believe in the sanctity of life from conception to natural death, and we stand committed to offering women life-affirming alternatives that protect the unborn and provide them with the resources that they need to choose life. So, if you live in Colorado especially, you will be forced to pay for the murder of babies in the womb with your tax dollars. Wouldn't it be a good idea to voluntarily fund the right side of the battle for life? So we encourage you to go to our website, financialissues.org, and you'll find the link over to such cute babies. Distracted by the cute babies. So go on over to our website. You'll find a link where you can give, and we encourage you to give directly to Preborn. We want to make the distinction. Preborn is a separate ministry than Financial Issues. So, make your check out to Preborn, and there is a match if you give to Preborn. If you're having just a really hard time deciding, do I give to Preborn or do I give to Financial Issues? To me, it's sort of a no-brainer. There's one is a much nobler calling. But now you don't have to choose, because whenever you make a donation to Preborn, there is a generous donor that is going to make a match to Financial Issues. So it's a twofer. So go ahead and pray about that and make that donation. If you're trying to decide on a number, our goal is to get to raise enough money to buy 50 ultrasound machines that will go in 50 different clinics, pregnancy clinics around the United States. So $28 pays for one ultrasound, and all of the money that you donate goes actually to that purpose there. The administration costs of Preborn are underwritten by separate donors, so you can feel good that all of your dollars are going to go for the purpose that was intended. Seth, did you want to add anything? I know there's a lot.
No, Shana, that is fantastic. Yeah, just one quick thing here. These ultrasound machines that we're trying to underwrite, 50 of them, they usually cost upwards of $20,000. This generous donor is basically giving us a discount where for every $5,600 that we raise, that underwrites one more ultrasound machine. So, if we get 50 of those, that hits that $280,000 goal. Shana, as of this morning, we're up to half of an ultrasound machine. So we're off to a good start so far. But if we can get that whole machine. We're at just north of $2,000 or so. So if we can get that whole machine done today, that'd be great. And get another one after that, that'd be awesome.
Our partners and our listeners have been extraordinarily generous when it comes to preborn
Amazing.
and other causes that are near and dear to the heart of the Lord. And so, I'm going to encourage you to get out there, make your donation early. Let's see if we can hit the goal early.
Yeah.
So we do have Mother's Day coming up. Consider making a donation in honor of the mom who chose life for you.
Amen. And Shana, you did mention going to our website, click the link. That's the best place to go because that automatically takes you to the FISM specific page that you give. If you were to call in to 250 and say keyword baby, you just have to specify that you're calling in for the FISM campaign. So make sure you do that as well. Yep.
All right. Well, folks, if you're listening on a station that only carries the 30-minute version of the show, we wish you a good day and a good weekend. If you want to catch the full show, go to financialissues.org/live or download the FISM app free to catch all the shows. Everyone else, stick around. We'll be back.
May is a time to honor mothers, their strength, sacrifice, and unconditional love. But for many women, motherhood feels uncertain and overwhelming. Fear and doubt leave them considering abortion. You can give hope. Preborn provides free ultrasounds and shares the life-changing message of the gospel, reaching women in clinics across the country. When you give to Preborn, you're giving these women a chance to choose life. Just $28 helps a woman hear her baby's heartbeat, a powerful moment that leads 80% of mothers to choose life. And when we come together to sponsor 200 ultrasounds, we'll equip a preborn clinic with a life-saving ultrasound machine. Will you help make motherhood possible? Go to preborn.com/FISM to give today. That's preborn.com/FISM.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I learned how to pray to God. It helps me through my day. I will commit myself to learn more about God's Word, to be able to share the gospel to others. Jesus has been a big impact in our family. Now we go to church every Sunday. I see more happiness and less arguments. God's love is so perfect, I will not change God for anything.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
Welcome back to Financial Issues. Thanks for hanging with us today. we've got another half of the show to go. So it is Rapid Fire Friday. Looks like we have a call coming in. If you want to be the next caller in the queue, 610-363-1110 is the number that you can call. But we've got lots of questions from social and the website. So Seth, where do we want to start?
Yeah, let's get it started here, Shana. We got a question that came in on the website just now from Brian in Missouri. Brian saying, happy Friday. I got a question. Can we assume that if we have any stocks that are not on the current broad list, that these were sells at some point? I have just a few holdings that I could have sworn were FISM buys, but maybe I missed a sell alert because they're no longer on the broad list. What would you have, Shana? I know this is more of a partner-specific question.
Yeah, so we have really kind of cleaned up the broad list. So right now, what you can assume that if it's not on the broad list is that either there was a sell issued or to our knowledge, it was never on the buy list. So there were some things that were on the broad list that maybe were being considered at some point, but never actually made it on to the broad list. And, one of the foundational rules is that, if you really want to follow the strategy, it is a do-it-yourself strategy. So you can always buy whatever you want. But if you're wanting to know what we think is best, then you're going to buy from the buy list only. What you could do if it's something specific, you could send it to Pat and just we can look into it and see. But what you can know for sure is that if it's not on the broad list, we're not following it. So you'll if you have it and it's not on our broad list, it's not going to come up in our awareness. So you're never going to get a sell alert for it if something goes wrong with it. So in that instance, it probably would be best to consider getting rid of it if you don't have the ability or time to follow it and track it yourself.
Awesome, Shana. That's great. Next one up we have is Pharrell. Doesn't say his age, but he says, thank you for all the help you've been giving me working with the new website. No, he does say his age. I'm sorry. He says he's 65. He was using the 65 into retirement model before the site upgrade. He says, I've not yet begun to draw out of my portfolio to supplement my income. Now I'm using what I think is the correct new model for me, the growth in income. But here's my question. Where do I file my ETF 2 holdings and ETF 5 in the new model?
Yep, that's a great question.
Yep.
So those are going to be large cap value. There's a sector holding or a sector selection for that. Now, for any selection that you don't know where it goes, our website now has a nifty search feature. So if you go over to the broad list and you go to the search feature down there, sort of in the middle of the page, and you can put in the symbol, you can put in the ticker symbol, and it will pull up the holding, and you'll be able to see where we classify it. So if you ever have questions about where it should go, according to our models, that's a really great, quick way to do it.
Yeah, it's awesome, Shannon. I've found that to be very convenient as well. It's good. Brandon's up next. Brandon's 24. He has a coin collection, mostly as a hobby, he says, but it does contain a sizable amount of precious metals. I've never put my collection in my tracker, but now with the commodities sector, I'm unsure what I should do. I don't really want to buy the metal ETF since I already have metals. So should I put the coin collection under commodities, and then I'd be quite overweighted, or just buy extra material stocks to make up for having no commodities? What do you think?
So I would go with the first option to put the metals on your tracker. That's the neat thing about the tracker, because it is a manual entry. You can list all of your assets there that can fall. Now, when I would not put them on there if you don't consider it part of your investable portfolio. So, if you wouldn't consider selling them, that's why we don't put the emergency savings account on the tracker, because it's not really investable dollars. But it seems to me that it is part of an investment portfolio for you, unless you have accumulated them for some other reason than investing. Maybe you think it's going to be a replacement currency at some point in time or something like that. If that's the case, maybe not. But I think the best fit is to include it with your investment portfolio.
Good stuff, Shanna. Thank you for that. Yeah, that's definitely a good question. I haven't thought about the different reasons you could use a coin collection, but it does make sense.
Sure.
It could be investable or not. That's good. Leland's up next here, 71 years old. He's saying, I'm 71. I've never invested. I need to maximize my investment money to create as much capital as possible in the next 4 years. I'm able to invest about $1,200 per month for the next 4 years, and I'd like to know what you would recommend I focus on to maximize gains as safely as possible, but the growth is more pressing than safety. That's interesting, Shana. What would you have to say for Leland?
Yeah, so I see that struggle. Leland's really trying to balance out what's most important, and that's where you need to go.
Yeah.
So as you're considering investing, you have to weigh out these two statements. So I'm more interested in protecting and preserving against any downside volatility because I rely on my income and I'm going to potentially need the money to pay for things in the future, whether it be basic needs or future needs, healthcare or whatever it might be. Or is it true for you that you would rather take some risk and it's more important to maximize all the upside potential than it is to minimize downside volatility? So if the statement that I just said is more true, you're going to lean more toward growth investing and be aggressive. Now, what you have to really come to terms with is that risk and return are very positively correlated. I've been in the financial advising business for a long time, and when I start to have these conversations with people, it's always interesting for me to hear what their expectations are. So, I just kind of get them to tell me in your own words, what would make you nervous? What kind of upside do you want to see? What kind of downside do you want to see? And I'll tell you that everybody wants to average 10 to 12% and have very little to no downside. So it doesn't exist. There are products out there that have guarantees that lead some people to make you think that you can have the best of both worlds, but it's just not true. There is risk in every investment. There's risk in holding cash, and we experienced firsthand what that risk to cash is over the last 4 years. The risk to cash is inflation, the erosion of purchasing power, because we saw inflation at all-time highs. We witnessed, a 20 to 30% in the decrease of our purchasing power. Our dollars can buy less goods and services today than it could 4 years ago. So I guess his specific question is, what do I recommend to focus to maximize gains? So that's sort of we've tried to make it an easy answer. When you're looking at our buy list and our asset allocation model, go through and read the descriptions. If you want to be in the growth model, you're going to have pretty well 100% exposure to a diversified equity portfolio. We have very little to no cash or fixed income included in that model. So the variations can in yearly performance can be very drastic. The market 100%, if you look at the S&P, I would encourage you to go back and look at a historical record of the yearly performance on the S&P. The good years are usually really good, and the negative years are, somewhere in the negative range between down and 10 to 15%. But there are years and time periods where the market was down 50% or 30%. We experienced one just recently. So you have to be willing to ride through those bumps to get that high long-term growth. Now, if you're wanting to balance that out a little bit more, the growth and income strategy is going to give you some exposure to cash and to fixed income to help buffer some of that volatility. But specifically, when you go to the buy list, if you're looking for growth, we have a style box now, and it's going to the investment is going to either be considered a growth investment, which is what you're going to look for, Leland. If your goal is for growth, you're going to be looking for those growth stocks. Then we have growth and income stocks. Those are companies that we still expect to grow at a pretty decent rate, but they also come with a dividend in most cases. And then the other category is going to be income, which you would want to tend to stay away from if you're looking for growth, because the income are going to be companies that pay high current dividends or interest and have a secondary objective for growth. So we've tried to make it as easy as possible to follow the strategy and to be your own portfolio manager.
Shana, that's a great answer to that question. And, it is a tough situation Leland's in because of his age. I mean, at 71, that's typically the age where you're thinking, okay, now you're usually thinking this is more sustaining, but he's in a position, where he needs to have some, more of that growth. So yeah.
The other thing too that I see in his question, he's still investing.
Yeah.
So he's investing $1,200 a month, and that regular investment is going to help to buffer the volatility, because what happens is you're engaging in a practice called dollar cost averaging. So you're adding in a fixed amount of money on a regular basis. In Leland's account, $1,200 a month. So, if he goes into a growth company that experiences an immediate downturn, well, he has the ability to go in and buy more shares and to average down his cost in it. So that's a really great way of investing. All right, we've got more questions, and we've got a caller in the queue. We'll get to Robert as soon as we get back from the break. But right now, we've got to take a break, and then we've got the last quarter of financial issues. We're going into the fourth quarter. Stick around.
It's up to us to stand up and say, enough is enough. All of this unbiblical stuff that's going on, whether it's abortion or transsexual or LGBTQ, widespread pornography, human trafficking. Bottom line, it's still up to us. If we stop investing in these corporations that are trying to destroy us, sooner or later they're going to wake up.
To learn more about biblically responsible mutual funds and ETFs, go to timothyplan.com.
Each May, we celebrate Mother's Day and the gift that mothers are to us. This May, you can help make motherhood possible by supporting Preborn. Preborn partners with clinics across the country, providing free ultrasounds and sharing the hope of Jesus Christ with women who are abortion-minded. When you give to Preborn, you're giving these women a chance to choose life. Go to preborn.com/FISM to give today. That's preborn.com/FISM.
What separates Crossroads Kids Club from other ministries to reach school-age children? What sets you guys apart?
First of all is our connection with local churches. We mobilize, equip, train, support local church partners. We're right inside the schools. There's a number of ministries that try to serve public school children outside of the school, but we're able to be right there on the campus. Another key thing is just our values. Our highest value is actually relationships. And so we're not a ministry that's driven by a lot of fancy technology or flashy stuff, but rather getting adults who love Jesus and who love kids to sit on the floor with a group of kids, to listen to them, to love them. So I would say the relational emphasis and the simplicity of the model is actually something that makes Crossroads special as well.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. We were talking over the break. Seth, share with them Jason's comment.
Yeah, Jason, brilliant, just absolutely brilliant. He says, ask Shana this. Have you ever redecorated your home for $2.5 billion like the Fed did with taxpayer money? Yeah, me neither. Delete the Federal Reserve. Here, Jason. I love it.
Well, we are building a house. I wonder if I can get any of that money.
Yeah.
I mean, that would be nice.
Put a new swimming pool in there or something. That's fun.
Yeah, but I think it's getting a lot harder to do all of that. I watched Jesse Waters as he sat in on a Doge meeting. They have them at 10 p.m. at night.
Oh, gosh.
Isn't that crazy?
It's like secret meetings. It's fun.
Not really secret. I mean, they did it and they talked about it right there, on the interview. And one of the interesting things that they said was one of the ways that they're stopping fraud is just by asking people to be accountable. And so the Department of Treasury, one of them was talking about how a lot of the Department of Treasury processes like $5 trillion worth of payments a year, and there's no codes about where that falls in the budget, right? So, you know, I mean, I run a business. The ministry, you know, the ministry sort of runs business. It's not a business, but it, you know, there's a code for everything, and it puts it where it goes when you're looking at the balance sheet and the P&L statements and all of that, so you know where you're spending money, but not at the Treasury, which was interesting. And so they were talking about this one little slush fund that Congress funds every year. It was like something like I don't know, $50 billion a year that goes into the slush fund, basically. And it was for, one of them was for education, one of them was for COVID things. And as they got into it, they started digging into it, and they started finding that some of this money was going to rent stadiums and do different things to have these big parties. And the way that, you know how they stopped it? They just said, before you request a drawdown, submit us a receipt.
Wow.
No more request.
Oh my gosh, that's simple, huh?
No more request. Just submit a receipt. I mean, don't you have to do that whenever you have an expense account just about anywhere? I mean, if you're looking in your own bank account and you see a charge, maybe, you know, hopefully you and your spouse share a checking account, and you're looking at a charge, and you know you didn't do it, so you go and ask them, did they do it? Well, no, if they don't have receipts for it either, don't you want to know who does?
Right.
Don't you want to know who's getting your money? But, you know, yeah, that was very interesting that they said that. And then Elon even went on to say, you know, we didn't say we were even going to look at it. You could put a picture of your dog or whatever, but, you know, we just asked for something. And all of a sudden, people said, I don't need it anymore.
Wow.
It's crazy.
How about
it's
that?
Crazy.
You know, Shana, the idea, it's fascinating to think about this. I'm not sure if you ever thought about this before, but it just, you know, came to mind as you were talking. Our ruling elites who manage our money in such a great, wonderful fiscal way, the reality is it's actually not their money. And so I'm wondering if that's part of the reason why is they just think, well, it's not mine, so I can do whatever I want with it. You know, it's just taxpayer money. Like it's kind of a sad way to think about it. But I couldn't help but think if it was their money, they probably would care a lot more about it, you know? So
they should.
Crazy stuff.
You know, theoretically, we give them permission to be there by voting for them. And, you know, it's a sad thing. You know, it started, I think that when the federal government began, there were like 4 federal agencies. Now there's over 400.
Good grief.
I mean, that's just, I mean, why do we need that? We don't. So I think Trump and Doge is going to take care of a lot of that.
Maybe so. Yep.
Robert has been waiting so patiently. Let's get to Robert. Hey, Robert, you're live on Financial Issues.
Hey, Shana.
Hello.
Steph. How are you guys doing?
Hey, Robert. Good to talk to you, buddy.
I would love to have some of that money. I want this lot next door to my house.
Yeah, right, man. Get in on that.
You know, you probably could go a long way towards having it if you hadn't paid your taxes.
Mercy. Yeah, it's crazy.
I'm not advocating that.
I know. Give to Caesar what is Caesar's, and give to
there you go. That's right, man.
Amen.
Listen, we love the new website. It's great.
Good. Awesome.
And it does everything we want it to do. Now, I have an issue, and I just wanted to ask you. Now, we were in the models were changed. We went to from 5 to 3, and I'm in the growth and income, but I still have well too much over in the fixed interest amount. And I was thinking, and I almost did this, but should I sell some of my CDs or just wait? I was just kind of wait until they come due.
Yep, just wait till they come due. You know, when we change the models, you know, if there's anything that's like super earth-shattering, like if we all of a sudden increase cash, we would send out an alert and say, hey, make these changes right away. Otherwise, you know, any changes, any tweaks to the asset allocation models can be implemented over time. So especially what we did with the fixed income and with the CDs is we saw a window of opportunity as CDs reached and went over paying 5% per year. And so we thought that was a unique opportunity. We hadn't seen that I hadn't seen it since the beginning of my career, some 20 years ago, CDs paying that kind of money. And so the rates have gone down a little bit now, so we've sort of backed off of that. But if you did act on it, you built a 2-year or more CD ladder, and you probably sounds like you still have some CDs that haven't come due yet. So I would just naturally let that happen as the money, as it comes due. Maybe you want to make that, if you have one coming due on June 1st, maybe on June 2nd, you're going to rebalance your portfolio or start looking at some of that money that comes due. Just go update your tracker, and then you'll get a really good idea of where it needs to go.
Great. Yeah, that's what I was thinking about doing too. Another thing I wanted to ask you about is you haven't talked about this lately. We were involved in mutual funds, and that's all we had because Daddy did his own stocks by himself, and he really would go crazy when he got some bad advice from people. And so I was terribly worried about it, but the difference in doing the stock funds that you guys like, the growth and income, with the regular stocks and the mutual funds and everything added in together, and the difference between that and regular mutual funds is tremendous. So I know you ain't got time to touch it now, but whenever you get a day and you're hunting for something to do, you did it one time, but I can never find it.
So say again, what's the question?
So the question is the great difference between investing in nothing but mutual funds and, like, for example, our growth and income that you guys have that invest in regular stocks. And, we also have some mutual funds, too, that are with it. The difference is tremendous.
The difference in the strategy, like what it involves from you, or are you talking about the results?
The results, the money made. Show me the money.
Yeah. I've always been partial to building my own portfolio. That's why we have the two different models. But, like you said, not everybody has the time or the interest to do that. So that's where we offer those fund models. And I think people can do really good there. I mean, you're basically, it's a difference between, with the mutual funds, you're hiring professionals who all that they do is they work for a mutual fund company or a money manager, and they operate in their areas of expertise. So whether it be like a large cap, mid cap fund, or an international fund, or a fixed income fund, you have experts that are solely devoted to managing that portion of it. And then the part that you do is you just manage the allocation, how much goes in, how much is split up between the different funds. So how much to fixed income, how much to large cap growth, mid cap value, small caps, international, et cetera. So it's a less hands-on approach to managing the funds themselves. The other FISM strategy, so the asset allocation models are going to be similar as to the allocation to the different classes, but in one, like the mutual fund, you're going to allow the professionals to pick and choose the individual securities, and then on the FISM model, you're actually going to go through and pick those yourself. So,
yeah, and it's a lot more profitable by far.
Right.
One more thing I'd like to say. I'm losing my voice here, but we appreciate the preborn thing. I'd never heard of preborn until we started listening to you guys. And if you guys are preachers or listening out there, please preach on this. 20 years ago, I preached probably my first message on this. And I think one of the reasons people are so enamored with abortion is because they have no idea what the Word of God says about it.
Right on,
brother. It utterly condemns the shedding of innocent blood. So,
amen.
Yes, thank you for that encouragement, and encouraging the pastors to get out there and speak the Word of God. And so,
well said.
I do know Robert. I recognize that voice, and I know he does it. Thanks, Robert, for your question and for calling in, all your encouragement. I'm sure that you encouraged the people listening out there to do several things: to give to preborn, during this campaign, and to consider becoming their own portfolio manager. Well, folks, it's the end of the program. We've got to go, but we wish you a great weekend, a great day of worship on Sunday. And Lord willing, we'll be here on Monday to continue to remind you that God owns everything. The Master's coming back, and there's going to be a quiz. We're going to give an accountability for what we did with the time, talent, and treasure that we were trusted to manage. And it is our hope, our prayer, and our calling to help you be found a good and faithful steward when you give your answers. Check us out on the web, financialissues.org.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.